down market earlier. Everything was down. Now we have the NASDAQ, which is leading the way once again, and we have the S&P that's up. The Russell is flat and the Dow is down. Looking at what we were talking about yesterday, we have the NASDAQ at all-time highs, as you can see here, and then we have the ES that's hitting all-time highs today. As you see here, the ES is the S&P 500 index. We have the Dow, which is the futures contract. It's still down. It's about 4 to 5% below its all-time high. So I actually provided a trade idea today just to go long the Dow just to see if it's going to go back to that all-time high that we see here. So the Russell is far from its all-time high. It didn't hit its all-time high since October 2018, I believe. This is the high of this year, the 1715. It's still a little ways away from that. So the Russell has been the best trading vehicle over the last couple of years. So that's why I'm recommending it almost every day if you need some long delta. If we go and we look at this chart here, if we look at it and we go back a few years, let's go back 3 years weekly here, and you'll see this was the all-time high for it was actually about September of 2018. This was the all-time high for the Russell, so it's quite a bit away from that as well. So that's why it's been a good vehicle to trade. As you can see here, this is a weekly chart right now over the last few years. This was, a range that was trading in. Only time it was tough to trade the Russell was in March when it dropped so much. But since then, it's been a decent trading vehicle. As you can see, we go back to this 1-year chart here, daily 1-year chart. You can see that this has actually been a good trade on both sides. And that's rare in these markets right now, on these indexes, and even on some of these stocks. All right, so we got the S&P, the ES is at its high of the day. We're going to look to make an adjustment. You see that we have these positions on in this account, and we'll discuss some of them here in a second. But the first we're going to discuss this ES. This is because this has been going up several days in a row. We go back to this chart real quick. We're just going to bring this up, this ES, and you'll see that if we kind of highlight this, kind of make it larger so we can see it's been up several days in a row already. This is the 4th straight day up, and it's out of the last 7 days, it's been up 6 days. And then you can see here out of the last several weeks, it's only had 3 down days, right? And those days have been fraudulent down days. So but you have to be vigilant about this because we've been going up so much, and we can have 1 day down that can wipe out all of that, right? Wipe out all of those days up. And I wouldn't be surprised if that happens in the near future, because this is completely insane how much we're going up every day. All right, so going back to this ES position here, looking to make an adjustment. This is currently at the 26 delta. So as you know, we have a range of deltas that we discuss. We'll go over that here. We got 0 through 15. We consider green area. 16 through 30, we consider yellow. You just want to be a little cautious about it. And then we have 31 through or above is our red area. That's where we're going to be a lot more vigilant. We're going to be on red alert, and we're looking to make an adjustment or just watching it very carefully. So in this case, we're on the upper side of the yellow zone, that our caution zone, and so we're looking to try to make a little adjustment here just to bring it down a little bit. I'm just going to make a small adjustment because I'm expecting the ES to go down here soon. But if it doesn't, I'm going to play the mechanical process and just make a small adjustment here. I do not have to, but based on how this market has been going and we have 24 days to go, I'm going to make an adjustment. So if you're in this trade, I encourage you to do the same. So I'm buying this back and moving this. I'm doing a full roll away, and that's going to cost me, after fees and commissions, $38, $39 if we round up here. And that's if I get filled at the mid, which I probably will not, but we're going to try to do it anyway to see if we get filled at the mid. And so far, no cigar. We're going to this working order. It's working. It's actually, they actually pumped this up a little bit. The mid was 60, then it jumped to 75. So they're going to probably make me, they're going to probably work me to get out of this. So this is going to be $41 now that we're going to need. And that is still not going to get filled. It seems like once I put that price in, the market changed to the 75, which is frustrating, but we'll play the game that they're playing. And so that's 70. You see it's jumping around. So I'm probably not going to be able to get out into 75. So I'm going to take a little small loss there. So that was, we can go to here to fill, and you'll see that it cost about, we got to remove some of the fees here. It's about $43 to get out of this, to get out of that trade. All right, so let's just say $44. Now we're going to bring up roll up the put side here to finance that. And what I'm going to do, I can't do this in concert, but I'm going to show you what I'm going to do. I'm going to have to take this off as 2 trades, but I'm going to move this up, and I'm going to move it up. As you know, we can go as high as the 25 delta when we're rolling up. I'm going to move this up to the 3270, keep it the same width of the spread. And if I can get filled at here, then I'm going to get more than what I need. So I'm going to buy back the first part because I can't do it in concert on the Tastyworks platform on options on futures. So I'm buying this back here, and they're probably going to rob me to get out, but we'll see. All right, so they didn't. So awesome. So that was $50 to get out. So now we're going to go to the call side there, and excuse me, we're going to go closer to at the money here. I'm going to sell the 32, which is the 19 deltas, as you can see right here, and we're going to sell that, and we're going to buy the 20. So we're going to keep it 20 points wide. It was one contract, so we're going to go there. We're going to see if we can get that monies. So we received 50. This is going to be about $53 more, about $43 more if we can get filled at this mid. If not, we're going to have to adjust this. All right, so we got filled there, and let's see what happened. See if we did that correctly here. This is the trades that we just did, and we wanted to do it for a credit, right? This was everything we did today. So let me actually refresh this to make sure this is correct. Let's go, and then let's go here and put today. All right, so now it's correct, and you can see right here that we did this adjustment for credit. We received $37.50, and then you subtract the fees, and then you subtract the commission. So you say $37.50 minus the $6.96 minus the $10, and then we receive the credit of $20.54. So this was a good little adjustment, and now with the ES, we're at the 19 delta now on the put side, which is significantly outside of the expected move. The expected move right here is 110 points. We're way below that at the 19 delta here. And then on the call side, we're just inside the expected move. But as we just pointed out on that chart, we've been going up so many days in a row. So many days have been up days over the last 3 to 4 weeks. So this should be, but you know, that's a big question mark, safe at this point. But I wanted to be a little bit more vigilant and move it early. So now I'm going to wait until we get deeper into the red zone before I move this again. But hopefully the market will settle down and we'll be able to take this position off with a nice little win. All right, so going over to a few other positions before we discuss a couple of things. This position right here we put on, this was the Euro currency and options on futures. We are up on that quite nicely. We've only been in it for a few days. And the oil position that we put on, I believe we put this on yesterday, we're up almost 30% on that already. We sold a naked share, or we sold a share, just one share to hedge that position, and that's down. But you can see based on how we did the trade, if this goes up, we should still win, because it was a bullish position on this. and it's been going up a little bit. As you can see, oil's up a little over 1.5%, and that short share that we sold is not affecting the trade at all. And then we went over the ES, this NQ, this natural gas position, that's doing fine. We made an adjustment on that a couple of days ago. That's doing fine. Our Russell position, this is what we're getting our long deltas in. This is doing fine with the put spread there with a few 24, I believe, days ago, and a put spread at the 52 days. This is the hedge to the euro here. This is the hedge. We did a broken wing butterfly hedge to match this here. And then this is the QQQ position that we've put on. We've put this on. We've adjusted the call side a little bit. We rolled up the put side a little bit. The other day we were a little aggressive. We rolled up the put side to the 25 delta, and that was just yesterday, I believe. Now it's the 21. So that was a smart move to this point to get aggressive on that roll up, because this NASDAQ has been really pain. Now you can see that because this is up again, this is a 40 delta now. So I'm going to wait until this hits the 45. And because this is might even wait a little longer, because this is a defined risk trade on this QQQ. The max I can lose is already in this trade, and I just believe that this NASDAQ could drop here soon. But based on how it's doing it again today, it feels like it's just going to shoot past 11,000 and go to 12,000 before we even finish the week, based on how we've been trading. But excuse me, I'm just going to let that play out a little bit, maybe try to make a tiny bit of adjustment once it hits the 45 delta, but I don't want to roll that out yet. With that said, these two positions are hedges, just to give an update. And looking at a few trade ideas. If you have any questions, please interrupt me. But looking at a few trade ideas this afternoon, or this morning, I sent out some trade ideas in ZB, and I know one of the members was looking at putting on a trade in ZB. This might be a good trade to put on in ZB, and if you need to turn into an iron condor, you could. But I'm going to show you this as a put spread first. So it's down. It was down a lot more. It was down over a point. But this morning when I sent this out, I was selling the 71, buying the 70. Is that correct? That doesn't look right. All right, so yes, that is correct. That was only a 1 point wide spread, and we're getting a decent amount. So the person I'm talking about, Gary, if you're on the line, you could sell something like this and get the monies that you need and have a little less risk, max loss potential, and buying power. And if you need to adjust that a little bit more, I would adjust the put side, because I'm betting that this market's going to go down, and bonds are probably going to stay elevated or go up a little, because this market is ridiculous. All right, so if you can do that, you'll see that you're going to get what you need. I think you needed 250 to do a non-traditional adjustment. Now you can do that. All right, so another thing I wanted to point out, one of the trades I was talking about this morning is F, which is Ford stock, and I sent a strangle in this, and I want to kind of give you my thought process on this. We were selling the 7 strike and selling the 6 strike. And this morning I was looking at for 55. It's trading for 56. So what I'm betting is that you're going to collect more than what this goes up. You're collecting 56. This could go up. I don't think it's been hard. 7 has been like a hard, level for Ford to go over, and 6 has been a hard level for it to go under recently. So I think this is a good little trade for a low risk type of trade to gain a little premium, because even if this goes up 7, even if it doubles by 100 points, it's still not going to be terribly painful. and you can easily adjust this, and you can easily adjust a strangle. So I like this trade for a smaller account, even for a bigger account, if you're looking to gain a little premium and something that has been staying in a range. And the last trade I want to talk about that I sent out today was a BBY, which is Best Buy trade. Best Buy came out with some earnings. They did well in the earnings, but the stock has been going up a crazy amount, so it's kind of cooled down today, which makes some sense. But I would get bullish on this if you need some long delta in your account. Looking at the 52 days to go, I was looking at doing selling the 95 and buying the 92.5. So this is a tight spread, but looking at this morning, I was looking at 36 points and doing 2 contracts. So right now I would take this to the 37.5, 35, stay at go no higher than that 15 delta. Actually, that's still not good. The premium has really come out of this right here. So I would disregard that. I wouldn't do it for anything less than 36, and they're not giving it to you at that point here. All right, so any questions before we conclude this live pop-up session?